Hello traders, this is the second part of a trend following strategy based on our previous video on trend following techniques. We will be developing multiple strategies using the same trend following technique, which involves following the trend with the moving average ribbon. We will use another awesome indicator filtering the trend and finding the entry point. We will use the H1 timeframe for this strategy. As usual, we will only use two indicators to build our strategy. The first one is the moving average ribbon developed by Mort Diggity, and the second one is the WaveTrend High and Low developed by Emmy Kelly. Let's fine-tune the settings of these indicators. The moving average ribbon will use the 50 and 100 simple moving averages. We will not use the signal line and will uncheck it from the settings. Now, set up our second indicator, WaveTrend High and Low. Open the settings and make the following changes. Channel length, 100. Average length, 50. Overbought level 1, 70. Overbought level 2, 50. Overbought level 3, minus 70. Overbought level 4, minus 50. Now our chart is ready to determine the direction of the trend and identify the proper place to open a trade. First of all, we will use the moving average ribbon to understand the trend direction. If you have watched our trend following technique, you already know this. Anyways, when we find the price above the band cloud, it indicates an uptrend, and when the price stays below the band cloud, it indicates a downtrend. When the market price stays between the upper and lower bands, it is in a range, and we will not open any positions during this time. This formula helps us avoid trading against the trend. Now, let's take a look at the WaveTrend High and Low indicator. When the WaveTrend High and Low line crosses the zero line upward, it gives us a buy signal, and when it crosses the zero line downward, it gives us a sell signal. However, always remember that we use the WaveTrend High and Low indicator as a filter for finding the entry point. If it crosses the zero line up and the price still stays between the two bands, then wait for the price to go outside of the band and confirm the trend. If the WaveTrend High and Low indicator crosses the zero line and the price stays outside the band, we can enter the trade. When the WaveTrend High and Low line crosses the 50 line, it indicates a strong uptrend momentum, and when it crosses minus 50, it indicates a strong downtrend momentum. It can also give us a second entry. When the WaveTrend High and Low line crosses 70 or minus 70, it indicates extreme oversold conditions. If the ribbon stays in a straight sharp angle fanning condition, it indicates that the market will drive further upward or downward. We can set break-even and hit our trade's daily support or resistance. This way, we can maximize our profit. Some important indications can be our force exit points. After entering a trade, if the market price can't break the recent high or low and forms a double top or bottom pattern, we should exit the trade or set a break-even. Stop loss. Money management is the key to the success of any type of trading, and a stop loss is mandatory for trading any investment to secure the assets. In this strategy, we will place our stop loss at the recent high or low. Let's look at some examples.